Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. On today's video, I'm going to show you how to use the MACD to enter into high quality trades. The MACD indicator is probably one of the most popular lower studies out there, and it is personally one lower study that I use all of the time. So with that being said, we are going to discuss what the MACD is, the calculations behind the MACD, and then we're going to go over 4 examples using the MACD, how I personally use the MACD to identify trading opportunities. In the 4 examples, we are going to go over 2 bullish ones and 2 bearish ones because you can make money on the way up and you can make money on the way down. The stock market has been treacherous over the last couple of months, and with that, a lot of people think that there is no way to make money. But you can actually make money as the stock market falls by getting into bearish trades. And to be completely honest, a lot of the trades that I've entered in over the last month and a half have been bearish because the trend is your friend, and the trend right now is downward. But there are some bullish trades that I will be getting into. There are a couple stocks that I have on my radar for a potential reversal, and when I enter into those positions, I will notify you on the private Discord server, which you get access to by joining the Patreon. Now feel free to jump around in this video. I will provide timelines down below to help you navigate through this video a little bit quicker. If you just want to go to the examples and jump right into it, you are free to do so. Just check the timeline down below and take a look at the video description as well. You can get free stocks by signing up for Webull, and there's some other things in there as well to make you a better investor and or trader. We are going to go over 4 examples in today's video using the MACD to enter into high quality trades. At the end of this video, and after we go over these 4 examples, you should clearly know what I'm looking for in a trade before I enter it and how the MACD is beneficial and helpful to enter into trades that are high quality. The MACD is not foolproof and it should not be used on its own either. In addition, just because the MACD is telling us something and there is price action that is telling us something, trades can go wrong. And that is why it's always best to identify a stop loss before you enter into a trade. Because no matter how high of a quality trade it is, it can also not go the way it should. Before getting into the 4 examples, we need to include the MACD onto our charts. The MACD is a lower study. It is probably one of the most popular lower studies. The MACD and the RSI are probably used the most. To get the MACD on the chart, and this is thinkorswim, but whatever brokerage you're using is going to be very similar. We just need to add the study. So all I have to do is type in MACD here, and I'm going to hit add selected, and we're going to keep the default settings, and I'm going to explain these settings in this video as well. So we'll hit OK, and now it's down below because it's a lower study. Now that we have the MACD on our chart, let's talk about its components, its 3 main components, and how it actually calculates and what are we actually seeing when we look at the MACD. Well, the MACD is comprised of 3 main components. You have your MACD line, you have your signal line, and you have your histogram. The MACD line in this chart right here, this lower study, is the light blue line. As you can see here with our formula, and this is the standard setting for MACD, you have 12, 26, and 9. Well, this blue line, the MACD line, is the 12-day EMA subtracted by the 26-day EMA. That value is then plotted on this lower study. The white line, the signal line, is the 9-day EMA of the MACD line. It's basically a smoothed out version of that blue line, of the MACD line. And then the histograms are just this, and these are measured by the distance between the MACD line and the signal line. For instance, as you can see here, we have a large distance between the 2 lines, and that's why these bars are much higher than they are over here. And right here, we have a lot of separation, and that's why these bars are even higher. Green bars are shown when the MACD is above the signal line. Yellow bars are shown when the MACD is below the signal line. Essentially, we are below the 9-day EMA for the MACD line, and that's why it shows red. And when we are above the 9-day EMA of the MACD line, it shows green. What this lower study is primarily used for is to help determine if momentum is dying in a particular stock. If the stock continues to move higher, but MACD is decreasing, that might be a signal that buyers are starting to get tired and sellers could step in and take over. It helps in determining a reversal of a stock, whether that's a stock that is topping out or bottoming out. That is what the MACD is used for, or at least that is what I personally use the MACD for. Now, I am a swing trader or a longer term trader. Now, me personally, I like to enter into trades that take at least a couple of weeks to play out. They're swing trades, and I also use this to help determine if it's about time to dollar cost average into an investment of mine. So with that being said, the time frames that I mess with, I'm not dealing with short-term time frames. I'm not dealing with the 1 day, 1 minute. I'm not dealing with 5 minute charts, hourly charts. The time frames that I will use to help determine entry points include the 4 hour, 1 day, and weekly. The further out with the time frame you go, the better this signal becomes. But when trying to identify if momentum is dying, maybe sometimes you have to zoom in on the time frame just a little bit. We'll dive more into that, and I'll give you some examples in this video. Okay, I want to go over my first example, which is going to be in Home Depot, ticker symbol HD. I'm going to show you how to use the MACD to identify high quality trades. So for me personally, the most important thing here is price action, support and resistance lines, and trend lines. Those are going to factor in much more than what's happening in the MACD and the RSI. But that MACD signal that we're looking at is going to help add confirmation that we are getting into a high quality trade, either bearish or bullish. So to get started, the first thing is to draw support and resistance lines. I'm on the 1 year, 1 day chart, and I'm just going to draw support and resistance lines. We have a resistance here. Now I like to color code them based on the time frame that I'm using. And since this is the daily, I use green because green corresponds to dinero and daily starts with the letter D. So, and I like to draw them with the dashes. So there's my first resistance, and then I'll add some other lines as well as support lines. There's a support. Then this was consolidating for a little bit. We have it right here. And then we have another one right here. It looks like there was a double, triple, 1, 2, 3. And that's good for now. We're just showing you the example. So what am I looking for right now with Home Depot? Well, we definitely have this range here that's of interest to me. The stock is either going to touch here at the support line. This might be a dead cat bounce, or it'll touch here, or it's going to retest those highs and either break out or get rejected. So those are the key levels that I'm watching. And then I'm going to use the MACD when we get to one of these points to try to help determine if we are going to see a reversal or a breakout. So we need to fast forward to a time where we actually test one of these support or resistance lines. So here we are approaching this January 3rd, we're approaching this top right here. And we can either form a double top, which is extremely bearish, or we can break out. So what I need to do is I need to zoom in a little bit to determine what's actually happening, because I'm not getting any real good information here on the MACD. This is telling me that the bearish move is over. Now the MACD line is over the signal line, but this could be a complete fake out. So what I want to do is I want to zoom in on the 180-day 4-hour chart, and I want to see if there's any kind of divergence in the MACD. So I definitely see that the MACD, here's the prior level, and we're about at the same price, and we are lower on the MACD. This is a divergence to me because we're at the same price, but we're lower on the MACD. This to me is a signal that bears are starting to take over. The buyers are getting tired. They don't have as much momentum as they did before. So it's likely that we are going to get rejected at this point. This is not good enough for me to enter into a trade. I need to see some bearish activity happening in the candles. And right now, I don't really have it. But if this candle was to break down and then get into this body of the green one, that might do it for me. So let's fast forward a little bit and see what actually happens today with this stock. All right, here we go. We're starting to see a lot of bearish activity with this candle. So this, to me, being a little bit more of an aggressive trader, it's a go sign to get into a bearish trade on HD. The other thing that somebody might want to do is wait for an actual crossover on the MACD. But what I see a lot of the times is the MACD is a lagging indicator. And by the time that crossover happens, there is a lot of movement already in the stock. So I like to get in based off of candles, support and resistance lines, and divergence on the MACD. I'm not waiting for the actual crossover. So now I need to get into a bearish trade for Home Depot. And what I'm going to do is I'm going to enter into a put debit spread for this stock because that's what I like to do. And I'm going to try to identify a point where I think the stock is no longer going to fall. So just real quick for this example, we have this $380, which was the prior low on the 4-hour chart. We also have the 200-day EMA right here at $390. So I think the bottom is probably going to be between 380, 390. So what I'm going to do is I'm going to buy a put debit spread. And today, or the time of this trade, is January 3rd. I want to go a little bit more than a month out. I'm going to pick this 18th of February expiration date. And now I'm going to go to the puts. So the stock is currently trading at $415. That's my high. And then I had 390 to 380. So what I'm going to do is I'm going to enter into a 405 and 385 put debit spread. So I'm going to hit buy vertical. I'm going to click that 405. This one is going to go to 385. So that is a $20 spread. And I'm going to pay $463 to get into it. I'm going to hit send. I got the order filled. So now we're going to head back to the charts and let this trade play out. Well, goddamn, the stock really fell. I probably should have picked something even more aggressive with the put debit spread, but this is really good news for our position. So let's go to the monitor tab and let's see what's actually happening with this position. We're up 269.35%. We can close out right now, or we can just fast forward to the expiration date, which is the 18th of February. So we'll go like a day before. We'll go to the 17th of February and see what's happening with the stock. So here we are. It's the 18th or the 17th of February. The chart is telling us that the stock is at $349. So we're basically at max gains. So what we can do is we can create a closing order and we can close out of this position. And we just made over 300% off of that trade. Moving on to example number 2, let's do the same process. We need to draw support and resistance lines. We're looking at the 1-year, 1-day chart. So let's draw some support and resistance lines in green to get started. So let's just switch this over to green, draw that, and then we're going to duplicate. So we're going to add some other support and resistance lines as we see fit. So double bottom here. Definitely this guy down here. Kind of choppy. I'm going to put one here as well in the middle of the range. So the stock definitely had a double top, and then it came back down to this double bottom here, and it's bouncing. So what I would like for this to do is basically the same situation, and we get a triple top. And we're also looking for that divergence on the MACD. It does look like we're about to start heading higher because we did cross over, and it looks like momentum on the downside is starting to fade. So we could have actually entered into a bullish trade here, but it's not a divergence because price is heading lower and so is the MACD. But momentum is starting to fall. So that is one way to use it. It's just not as powerful in my opinion. When you see that divergence, it's better. So real quick, what is divergence? Once again, it's when price is either declining and then the MACD is moving higher, or price is moving higher and the MACD is moving lower. Whatever the price is doing, the MACD should be doing the opposite, and that's when you get a divergence. It's a good signal of a potential reversal. So we need to let this kind of play out. So we're going to fast forward the chart till we get to a point where we actually approach one of these key support or resistance lines. So here we are, we're looking at Walmart, we're approaching this resistance here. We're not at it just yet, but we're looking to see what's going to happen with this stock. So do we have a divergence on Walmart? Well, we kind of do. We have a little bit of a divergence happening here, and we definitely have the histogram showing a decrease in momentum, and we have a huge red candle. So this again is another situation where we have a slight divergence, not as powerful as the prior trade. We're at that key level here. We can then enter into a trade here and we can use this key level as a stop loss. If the stock was to continue higher and the trade was to go against us, we can use this or maybe even this high as a stop out, because we definitely have a lot of room to the downside to enter into a bearish trade. So for me personally, that risk to reward ratio is well worth it. So same thing here, we can enter into a bearish trade. I'm going to do a put debit spread. I'm going to buy a put that is close to the money, basically at the money, and then sell a put that is below the 200-day EMA, somewhere between $140 to $138. And I'm going to do the same thing a little bit over a month out. So we're going to go to trade. We're going to pick an expiration date that's a little bit over a month. We'll pick that December 17th. Then we're going to buy a put debit spread. So we'll buy it at the $150, and then we will sell the $138. That's not traded. So we're going to do $135 for $336. I'll hit confirm. I'll hit send. And we bought one. I'm actually going to buy another. So we'll go to buy vertical 150 to 135, 335. And we bought another. So now we're going to go back to our chart and we're going to see what's going to happen with this stock. So I'm just going to cut to the chase. This thing is expiring on December 17th. So I'm going to go the day before, December 16th, and we're going to see how this position performed and what the stock actually did. So here we are, and looking at this chart, I definitely would have sold my position down here as we got down to this double bottom and this support line. And when we bounced here, I probably would have sold, but the position is probably still somewhat profitable. So let's go to our monitor tab. We're looking at Walmart, and it's a plus 37.85%. But I actually want to see what I would have made on this trade if I was actually going to sell out when we had a crossover on the MACD as we approach this point here. So that was back on December 10th. So let's go to that date. So here we are on December 10th, and we can see that the MACD is starting to lose momentum. Let's go to our monitor tab, and the position is up 246.45%. Based on those gains and what's happening with the chart, this is when I would close out of my position. So I'm going to sell them, and I'm going to lock in gains. If it's not getting filled, I'm going to decrease this just to get it filled here. So I'm going to decrease the credit to $11.50, hit confirm send, and now I sold them and I got $11.58. Here we are again. We're going to do another example, but we did two bearish trades. Now I'm going to show you a bullish trade. I'm on Walmart. I'm on the weekly chart. I'm going to just add another support line here and make this one yellow or white. I'm sorry, for weekly. W corresponds to white. And we're going off of this line here and where we're currently at on the chart. We're going to go back to the 1 year, 1 day and see what is happening with this stock. So we broke that prior low here. we're heading towards this, and then there's nothing else on the chart to this $126.28 low, which is the next support. So there's a lot of downside potential here. So this isn't a trade that I necessarily like, but there is a divergence happening in the MACD. If we take a look at the 180-day 4-hour chart, we can definitely see that even though price is decreasing, we have that divergence on the MACD, which means to me that even though the stock is selling off, it is starting to lose momentum. If we go back to the 1 year, 1 day, we can also see a divergence on the MACD as well, as you can see by this line that I just drew. And this is from the 100-day 4-hour chart. So if we're using that same concept, this probably isn't a trade that I would have gotten into because I'm just not a huge fan of this support line because it's really only got one instance, and that instance is right here. So it's, even though it's a weekly, it's not very strong. But I want to show you an example of a bullish trade. So let's go back to the 1 year, 1 day. We have that divergence. We are setting lower lows in the stock, but higher lows on the MACD, indicating that we are probably due for a reversal. So I need one other thing to get me into this trade. I need to see some bullish activity in the candles. So even though we have a couple things, it's just not good enough for me. So we need to step forward until we actually get some bullish movement in the candles. All right, so we took one other day, and as we zoom into the candles, we can see that we had this bullish hammer followed by another green day, a lot of volume, a lot of bullish activity in Walmart right now. So let's enter into a bullish trade. So for now, we're going to enter into a call debit spread. This is basically the same thing as a put debit spread, but instead of buying puts and selling a put against the put we buy, we're going to buy a call option and then sell a call option against the call option that we bought to reduce our cost of entry. So what I'm going to do is I'm going to buy a call option that is essentially at the money, and then I'll sell a call option and I'll sell it at this $145 strike. The same thing, we're going to pick a expiration date that is about a month out. So what I'm going to do is I'm going to buy a call option that's basically at the money. It's $136. It's slightly in the money, 135, and based on the charts, I'm going to do the 145 because that's around that 146. So I'm going to buy this call option. It's going to be a vertical, and then I am going to sell the 145 against it. I'm going to pay $362, and I'm going to buy 2 of these. I'm going to hit confirm, and I'm going to hit send, and we got that order filled. And now what we're going to do is we're going to jump to the day before this option expires. We're going to go to April 14th. So we're going to go April 13th. We're going to hit go. And as you can see, the stock had a major move. My max gains was here at 146. I missed out on this big move up here. Maybe I could have been more aggressive and done the $150 strike. But I never thought it was going to get this high. This is a dramatic move in the stock. But if we take a look at our position, we're up 175%, which is very nice. So we can close out of this, create closing order. We can sell both of these. We hit confirm and send, and then we sold out of that position. All right, so we're moving on to our next example. It is NEO, which is another bullish trade. So we're going to start by drawing support and resistance lines as we always do. And where this is the daily time frame. So we're going to make these green, and I like to have them dashed just to separate from the moving averages. Then we're going to duplicate this. We're going to add some other support and resistance lines. So right here, bring this back up to the very top right here. Nice little top there. We'll duplicate this as well. We'll bring it to right here for that. And we'll take a look at the stock to see what's going on. The stock is clearly in a downtrend here, as you can see by this line I'm about to draw right here. Stock has been moving down, but we are approaching this support. We're forming this triangle, which is nice to see. And what is going on with the MACD? Well, the MACD is trending higher slightly. So we have that trend on the MACD, which is moving higher, even though the stock is setting lower lows. So that is a divergence. And if we look at the 4-hour chart, there is a clear divergence in the MACD, a pretty big one if you ask me, where we have been setting higher lows, even though the stock has been setting lower lows. Take a look here. During this dip here, this is where the MACD was, and the MACD was at its lowest right here. So that is a sign that momentum is starting to fade and we could see a reversal. So I'm just going to wait for a couple green candles before I enter into a position. Let's fast forward to the next day, October 13th, and see what happens with the stock. October 13th is our first green candle. Let's go to October 14th and see what happens with the stock. October 14th, we had a red candle. We're not really moving up yet, so let's go to October 15th till we actually get a breakout. Here we go, it's October 15th. We actually started to break out, as you can see by this nice green candle that is gapped up. So this right here is a divergence in the MACD with us around a support line, and it seems like we're heading higher. So at right now is when I would enter into a bullish trade on NEO. So same thing, I'm going to buy a call debit spread. I'm going to use that $55 price as my short leg, and I'm going to buy a call option that's basically at the money or slightly in the money. That's a little bit over a month out. So what I'm going to do is I'm going to do November 21st. This is the expiration date that I'm going to pick. The stock is trading at $37 at the time. I am going to buy the 35 and I'm going to sell the 55. So I'm going to enter into a $20 call debit spread. Actually, I take that back because I'm paying $3.75. I'm only getting 11. So in this case, I'm just going to buy the call option, and I'm going to buy 3 of them, and I'm going to hit confirm and send. So now that I have that position filled, we are then going to go to the day before it expires, which is going to be November 18th, and see what happens with this position. So here we are. The stock hasn't really moved that much. It did break out, but nothing dramatic like the other ones. It got to this support or resistance, and that's kind of where it's been fading. And we did have a crossover on the MACD that occurred on the 10th, and that would have been my sell signal. But taking a look at the position right now, it is up 9.79% in a matter of a month. But let's go back to November 10th when we actually would have sold the position and see what we would have gotten for that position. So here we are, November 10th. We've had a big red candle. I probably would have closed out of the position on that day because it does look like this move is starting to fade. But anyways, this is as good a time as any to close out of the position. If we look at our NEO position, we are 75.26%. So we're just going to close out of that position, hit confirm, hit send, and that wraps it up for this trade. Now, if you have any questions, you can always reach out. This channel does have a Patreon of over 500 investors. If you join the Patreon, you get access to a private Discord server where I'm there every single day. And it is on that Discord server that I notify all members whenever I enter or sell a position. Whenever I'm using the MACD and I'm getting into positions like this and I've identified opportunities, I will notify you on the Patreon. If you have any stocks that you think are at a good opportunity right now, feel free to drop the ticker symbol down below in the comment section. I love to get ideas from you guys and to see if there's something out there that just hasn't crossed my screen yet. I really appreciated that you stuck around to the end. If you did so and you like the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Let me know other video topics that you would like me to discuss. Just comment down below on some video topics, some ideas that you might have, and I'll try my best to include a video regarding those topics. And again, I thank you so much for your time. I'll catch you on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.